Hey, Lawrence.
Oh, great intel today. Thank you, Simon, for your sharing your Ethereum concept. Really appreciate it and look forward to hearing more and getting a better understanding for my tax ramifications. Um, I've got a couple questions very specific to me.
hmm
I have a withdrawal preference exposure,
Yeah.
and I'm not sure that I need to join other people and pay lawyers to represent me. You said the date was coming up for disputing paying them the percentage.
Yeah. Okay. So, right, if you withdrew funds 90 days prior to the petition, then when you should have all received an email from Celsius at this stage with a password, and then you put that password into a link on Stretto. Beware of scams. Everyone's going to be sending you scam stuff. Make sure that it's hello at Celsius Network, and there's various other emails. Be diligent. Head over to the Twitter community. Check things first. Everyone's going to be trying to scam you. You're going to be getting emails in every direction from people that want to steal your money and steal your data. So Celsius has sent out an email. It will have a password. Enter that password, and once you get to a certain item, we'll go through more of this in the third video. It will tell you your withdrawal preference exposure. Um, and it will ask you whether you want to settle for 27.5% or not. And there is a group, I really feel underqualified on the legal advice because I haven't been following that, but there is a group. And my understanding is you can join the group, give a part of your claim. I think Aaron Bennett did a video on it. Hodler100 is the guy on Twitter that's leading the charge. And everyone's going to have to make their decision about whether they want to be a part of that, whether it will get dragged along, whether there's going to be safe harbor, whether there's going to be, in the ordinary course of business defenses, these are going to be heard. I believe that the time for that is going to be either before or during the confirmation hearing. But I would much rather you get that advice from the people that are actually involved in the ins and outs. And Debs, I think, is the counsel from one of the law firms that's doing that. So I don't think I've got much for you, um, Lawrence, other than make sure you're speaking to the people in the group. And if anyone's got some more information that may help other people, please bring it up here if you think you've got a better answer for Lawrence. Was there
So
something more specific?
that that's great. You went over it for everybody. It's stated on the form as withdrawal preference exposure. And again, I don't know that I want somebody representing me. If I could just go to another part of the form, um, there's a general earn claims, which is significant. And I would imagine that's all of the unsold Bitcoin and Ethereum and Matic and a very little bit of Solana and less of Cell token. But it's very disheartening to me that I'm going to be held hostage to negotiate for this withdrawal preference exposure when I have this additional amount on the old Celsius platform, as well as a loan, which was $100,000. Like you, I wanted to try it, and I have at the date of the bankruptcy, say 188,000 in Bitcoin, like 9.4 Bitcoin. So they're just going to have their way with me for this 27%, and they're going to hold my general earns claim, and they're going to hold my loan Bitcoin, and it just
Yeah.
seems like a lot to leave on one specific lawyer who's representing the ones who withdrew with the 90 days. There's so much more to the story, and I'm just touching the tip of the iceberg because I have other family members that are in here that were caught. They would take their money. They took their Bitcoin. We couldn't load up to cover the downward trend at that time in that account. And there is other Ethereum and Bitcoin on those other accounts that was not withdrawn. So I think guidance for other people that are in all of these different spaces, not by choice. And thank you again, Simon, for sharing your exit strategy at this point.
Yeah, no worries. And what I would say again, and I've really got to preface that I could be a complete idiot and completely wrong here, but the approach that I've taken throughout this whole thing is that if you want influence, you join an earn ad hoc and you get representation. Nothing else has worked in this bankruptcy. And so joining those that are fighting the same cause has historically worked out a lot better. So there's still reasons to join your own your earn ad hoc or your loan ad hoc or your clawback group or whatever it may be, because it's the only thing that I've seen that works. And what tends to happen is a group of people, there's a bit of a in economics we call it moral hazard, where some people are others want to just get dragged along and not pay, but then the people that paid, they end up getting the result for everyone else, and then everyone else can settle. So there's that moral hazard issue that tends to happen in this. But yeah, so I think the whole clawback stuff, most people are going to probably be treated the same, whatever the outcome is. And I don't know what the outcome is, and I don't know what defenses are going to be used, and I don't know the how that's going to be fought or what the outcome is. Okay, we'll move on from that one.
Okay, next speaker is Lucia.
Thank you, Azad, and greetings, Simon. Good to hear from you. And I was in your retirement plan B course back in, is it 2 years now? Was very useful to be in that course. Fortunately, I didn't have a lot of Bitcoin in Celsius. I did have all my Ethereum there, though. And I have, I had a lot of USDC, some other stable coins, and unfortunately, I was in one of those top tiers of sell token owners because I innocently bought them over a period of a couple of years, thinking that it would somehow buy me equity in the company or some such bullshit. But at any rate, so what I'm wondering is, since most of my assets are altcoins, does anybody know if I will get my payout, whatever it'll be, in Ethereum, or will it be split Ethereum, Bitcoin, or exactly how that's going to play out?
Yeah, it will be split Bitcoin and Ethereum. And if you are part of like a very large claim, then there's the potential to do a large OTC trade with Celsius. And so, for example, outside the US, this wouldn't apply to you in the US. But we're going to be pulling together a bunch of claims that want to, implement an OTC trade so that they can get it in the direction that they want. But for everybody, unless you're part of a very large claim, you'll be getting half Bitcoin, half ETH is the strategy at the moment. Nothing else will be distributed.
Okay, and when you say a very large claim, what numbers are you looking at?
I think it's like 10 million or above.
Oh, no, no, I don't have that. I do have a fairly large claim, but certainly nowhere near that amount. So, all right, so I understand that I will get half Bitcoin, half Ethereum, unless I do as you were suggesting, which is all 100% Ethereum. I thought that was interesting, and I'm going to have to go back and listen to that video to hear more on your thought about it. Actually, since I'm on the phone,
for you to execute that, again, not advice because there's tax consequences.
Right.
But you would receive some Bitcoin, you would receive some ETH, and then you'd have to convert your Bitcoin to ETH after you receive your distribution, because you won't have the option to receive it all as ETH.
I see. Okay. All right. That was a question, was how to go about doing that. So basically I would be converting it
You'd have
myself,
to trade yourself,
or do whatever with it.
Yeah, so you're going to end up, are you US?
Yes.
Yeah, so you're going to end up with your half Bitcoin, half ETH in PayPal, and then they'll probably have a. I'm not familiar with PayPal's crypto services. They may have a Bitcoin to ETH market. I'm not sure. And then to stake it, I don't think PayPal offers Ethereum staking. Highly, highly unlikely, because no one in the US can offer Ethereum staking. So, at that stage, I will personally never be using a third party to generate yield based upon the experience here. But I'm comfortable with directly staking onto the Ethereum beacon chain, if that can be proven that that's actually happening, and it's not someone just deciding to trade in lots of different things. As well, it would be an illegal security, as we all know now.
Right. Okay. Very good. Thank you. That was helpful. I appreciate all your time as always. Thank you.
Thank you.
Thank you. Next speaker is Henry.
Hello, guys. Can you hear me?
Hey, Henry.
Hi. Thank you for the video. Very helpful as always. I have one question that I'm kind of bugging my mind about, because I'm also thinking about the toggling and possibly maybe going full towards the equity. Depends how, like you said, how the team looks. My question is, in percentage, who will be the owner of the shares? Because that kind of changes everything. So I'm trying to figure out, are we the only 100% share owners when we come out of this? Or does Fahrenheit have any percentage of the shares, or who will have any shares?
Yeah, great question. So let's make sure everyone understands the structure here. Again, I really recommend reading the disclosure statement. I know everyone's not as crazy as me, willing to read 800 pages, but if this is a big part of your wealth, just put the work in, read it. Like it's an amazing piece of work in terms of understanding how they cleaned up this criminal mess. And so I really recommend reading it. So the way the way that the plan is actually structured is that Nuco is going to be a brand new company. And that brand new company is going to be, in the end, approximately 90% owned by us. The reason 90% is because Fahrenheit is a separate company. And that company consists of, a few people, which is Proof Group, US Bitcoin Group. They're the shareholders in Fahrenheit. Fahrenheit is not Nuco. It's a different company. And they negotiated between them in order to put together this sponsorship deal. How much equity do we want to split between all of us? And there's Ravi, who's likely to be coming over as a CFO. And there's Steve who's got his experience in Algorand, who's likely to, I think, well, they've announced him as the CEO, but we'll know that in the supplemental document. And so there's a slight interesting conflict that I want to understand in the management agreement between those that are on the board of Fahrenheit or shareholders in Fahrenheit versus those that are on the board or shareholders in Nuco. I want to understand that. But Fahrenheit is going to be seeded with 50 million from an undisclosed investor, as far as I know. I think it might be Arrington Capital, so part of his VC fund, or maybe some personal funds from some of them. I'd like to understand a bit more of that. We might get that disclosure. And then the 50 million is going to be invested into Nuco. And they're going to have a management agreement, which will be disclosed on the 8th of September. And in that management agreement, it will explain exactly how US Bitcoin Group is going to help us put our 122,000 ASICs to work. How Proof Group is going to transfer some of the IP for Ethereum staking over to the new company. And they're going to have this management agreement, and everything's going to be, by that time, the documents come out clear. Okay, so let's recap. You've got new company, which we're going to own about 90% of. Fahrenheit, a newly formed company that already exists, is going to invest 50 million into Nuco. That will buy it like 5% of the shares. And that will probably be done public. So depending on how they structure it, there'll be some kind of valuation analysis because it doesn't have the assets at that stage. And then they get incentivized with share options and performance bonuses. So if they achieve certain goals in the management agreement, then they're going to end up with another 5% of equity. We'll end up with 90%. And then if the board in the future decide that they want to sell additional equity or raise more funds, then that has the potential to dilute as well. So in answer to the question, 90% of it is going to be owned by us. And a lot of people, for example, have to try and get these shares into their retirement plan, or they haven't got a brokerage account. And so all of those challenges are going to be solved. And so, not everyone's going to have like all of their shares for dumping on day one. There's going to be hurdles there, challenges there. And yeah, that's the structure.
Simon, because
US Bitcoin Group is doing the mining for us, but they're not on the board. And so, that's why on the 8th of September, we get all that additional information that really helps us. And I'll be deconstructing that in future videos.
the reason I was asking about it, because technically this is going to be completely different than Coinbase, let's say, because Coinbase sold a lot of
Correct.
shares and they own a lot of shares what they could have sold, versus here, if a lot of people do the toggle, who's left to sell? That's what I'm trying to figure out. Because if a lot of people toggle, because 30% is pretty enticing. So if a lot of people that are scared of going to the new company do the toggle before it goes public, then there's not really much people left to dump. That's what I'm trying to figure out.
Yeah, toggle doesn't really change anything. Toggle just redistributes you so where one person gets less crypto and someone else gets more equity. But anyone that's toggling has put together a bullish case in their head because they want to get the extra, bonus equity. But remember, the bonus equity is the expense of someone else's crypto that they're getting at a discount.
Yeah, but
So
I'm
all it
saying,
does is it redistributes
yeah, but
who has the equity.
yes, and I understand that, but that's basically the person that toggles towards I don't want any equity, I just want crypto. That's the person that's going to be one less dumper of the stock.
Yeah, and those are likely to be the loans group, and the reason they're doing it is for tax reasons or because they want to do some kind of refinancing agreement and limiting their tax exposure. So I don't think Earn are going to be in that bucket. I think everything is going to go to the lending group that gets preference over that as part of the negotiations.
Yeah, so thank you for that. I just want to, the reason I'm asking, because I kind of see it pretty good as far as being afraid about dumping on the first day, and the 30% that we get, I could get extra should cover the dumping. So that's just my 2 cents in it.
Yeah, so it's interesting. Again, not financial advice. IPOs historically are just wildcats, just like bloody ICOs from my experience, but you just get more disclosure. But yeah, I was an early investor in the private equity of Coinbase, as I've said many times. And I didn't sell that equity, but the CEO and the other insiders sold a shit ton of their stock, and they did a direct listing. The pre-IPO was at about $100 billion valuation, and then it dumped it down to about $30 billion because the insiders and the executives were the biggest sellers. Now, if there are massive sellers in this, it's because they're either creditors or they purchase claims at a deep discount. So you've got the Nova Wolves of the world that purchase a significant position when they were at the pre-bid phase, and then when they went through the bidding process. And so they're at a different cost base to us in terms of recovery. They get their crypto recovered because they were the savvy, patient investors that were able to take that additional risk when others needed liquidity. And then they get kind of a free equity position. Now, whether the more sophisticated investors end up lending their stock to people that want to do short sales and stuff, these are all risks. And I really recommend people go through the disclosure statement and go through all the different risk factors, because if nothing else, it's if you're a geek like me, it's very educational. And it's the $350 million cleaning exercise has led to an incredibly written document that's cleaned all of these different issues and disclosed them. Okay, who's next, Assad?
The next speaker is AE.
Yes, hello. Once again, Simon, thank you for everything you've done. My question, so this might affect my personal strategy. Uh, so are US citizens able to stake Ethereum on Bank of the Future? I've looked on your site and I really can't find a means where it's
You can't, no.
readily identifiable. Okay,
Yeah,
all
no.
right. And next,
ETH staking. Kraken, I'm a shareholder there. They had to close down their ETH staking solution. In Coinbase, I think they're actually I can't remember. I think they're actually battling the SEC and keeping it open. I can't quite remember. Maybe someone can correct me in the US. But it's very hard to stake Ethereum through a centralized company in the US right now, and it's a major risk because there's that ultra regulatory uncertainty. So you have to end up a little bit, maybe going a bit more tech savvy and trying to do your own node or something, which most people won't want to do. Or you can look at some of the liquid staking solutions, which is adding a layer of smart contract risk on top of Ethereum staking as well. So you'd need to look a little bit. It's harder. This is definitely harder to implement for someone in the US, unfortunately. But yeah, Bank to the Future is not authorized to offer ETH staking. We got securities license in non-US, and we just secured our retail one, which will be announcing soon. But we haven't got US. In fact, no one has it. There's no one that's authorized currently in the US in order to offer staking as a security as a service. And we got all the SEC cases that are gonna, in the next 2 years, the US is gonna understand where it sits, and this will be very clear. But it's not clear in US right now, unfortunately.
Okay, next speaker is RMA Crypto. Okay, let's try Kingfisher.
Hello, Azad. Hello, Simon. Thanks for letting me speak. I mentioned something similar in the recent space, but I couldn't really get any answers, and I was just wondering if anyone had any insight to this. I have exposure of greater than 100K for preference. Now, one thing that I find highly unfair is that there is this cutoff of 100K, which means if you have a higher exposure, your entire exposure gets taxed by 27.2% of 0.5%. And I'm wondering why, first of all, why that is, and why we couldn't just have that payment for any claim over 100,000. As I mentioned before, same thing for the IRS. If your income tax bracket goes higher, you don't have to pay the highest tax for all your income, but only for the higher brackets. I don't understand where the rationale comes from. Why, if you have anything over 100K, you have to pay, clawback fee for for the entire position. I don't understand where that it goes from. Is that fixed? Can that be adjusted or so?
Yeah. So the plan states that if you have less than 100K, then if you agree to the plan and you go through the class claim, we'll go through more of this on the third video in a couple of weeks from now. Then you get released from any preference litigation. If you got over 100K, then you get the opportunity to settle, and the defenses are going to be fought, and I don't know the timing on that. I believe it's going to be part of the confirmation hearing. But is it unfair? There's literally, if you've got 99,000 and 999, you've got no exposure if you agree to the plan. And then if you got $1 over, you have. Even the 90-day period, if you withdrew 91 days, you're scot-free. And then if it's 90 days, you've got the exposure. So unfortunately, it's just those are the rules that were set into the bankruptcy code. The UCC believes that they've got a fiduciary duty to come after that because they believe it adds value to the state. The judge said that they will give everyone their defense in court to fight it. And my best guess is that they chose 100K because they thought anyone under 100K will probably be incrementally not worth pursuing. And everyone that's less than 100K, they could get a big chunk of them to vote for the plan, and that will give them a massive chunk of getting this plan through, so we can all move forward. So it's all the game theory, it's all the dynamics, it's all the laws, bankruptcy code, it's fiduciary duties, and it's unfair and it's shit. But it is the way it is, and it's the cards we've been dealt.
Okay, let's move on to Deb Frankel, next speaker. Deb, can you hear us? Okay, I think that's it, Si.
Oh, wow. Okay. If no one's got any questions, we're going to end early. If you'd like to ask a question, speak now or forever hold your peace. We're going to be coming back next week. And
Can you
next
hear
week.
me now?
Oh, here we go. Hey, Deb.
Hey, sorry, I've never spoken on one of these before, so I didn't know how it worked. I just have a sort of off-subject question that I thought of when somebody was talking, because I had ETH2 on Coinbase, and so it's still getting staked, but can I unstake it and take it off Coinbase now?
I believe you can. I don't think they'd have a restriction on unstaking and withdrawing. I believe that they're still offering that service. But best to check with Coinbase. Yeah.
Somehow, yeah, because they were saying that they turned it into some weird ETH thing to get it off there, and that seemed strange to me.
Probably. So the history is that when Ethereum switched from proof of work to proof of stake, there was no way of unstaking it. So what happened is a bunch of the exchanges created proxies of Ethereum. And this was one of the attack vectors at Celsius, because everyone could see how much of their ETH was staked. And then that token adds additional risk, and it can depeg, and then speculators can actually create an attack vector there. And so that's why the SEC is saying, no, these are securities, and these risks need to be disclosed and understood if you offer this. And then that's kind of what the battle is, and the Coinbase is saying these aren't securities, and so that will all be figured out. And you'll know whether you can or cannot do it in the US in the future, and if what the model looks like. But if they're allowing you to stake, then I think you can most likely continue to stake.
Okay,
But
because
check
I
with
don't
Coinbase.
really, yeah, because I don't really care about the staking. I just don't want to lose my ETH, you know, like I lost everything on Celsius.
Yeah, so that is still a risk. Coinbase has a couple of services. They have like a custody wallet, which is where you actually own the key, and then they have a centralized custody service. And while Coinbase is probably you can never say anything in crypto, but
I know.
they've been the most responsible at keeping people's funds, but it's because they've also implemented big degrees of regulations that have meant that it may be harder to withdraw. So you're in this whole custody versus self-custody education, and I think responsibly, little bit at a time, people should learn custody and then work with regulated custodians. If you want to diversify risk, because the risk with self-custody is you need to know how to secure it, and you're the boss, which is a good thing and a bad thing. So, when we work with customers, we try and get a disaster recovery strategy for every type of scenario, in case things go wrong. But yeah, Coinbase is probably tier A in terms of, but even they got the chased by the SEC. But anyway, I don't think you're going to lose your, famous last words. Don't take it as advice, but I don't think you're going to lose your Ethereum. If they can't do it in the future, they'll just make you withdraw it or convert it to something else, and you'll have to figure out another solution.
Okay, let's bring up Natty.
Oh yes, good evening, everybody. I wanted to talk about the BTC recovery in the distribution. So you mentioned from your presentation tonight, your strategy is to. Can you come back on the conversion to ETH? You count on the ETH yield to compound and buy back BTC. On the in-kind redistribution, you will get back in your own custody. So that was the strategy you presented tonight. Or can you come back on this, on the ETH conversion and your strategy to get back your lost BTC?
Yeah. So basically, my current plan is not to toggle. It's to have, again, this is all depending on what we get in the additional disclosures, but it's to have two strategies. One is equity in the mining, and then also the ETH staking rather than holding Bitcoin. And then I'll be doing my maths, and based upon when litigation proceeds comes in, I'll be converting to Bitcoin. With the equity in the crypto, I'll be holding the crypto, ETH staking and restaking for compounding. And with the equity, starting with seeing what the trends are going to be like in terms of outperforming Bitcoin and holding the equity, and then just seeing what the board does with it as it goes forward. And then eventually, if those three different plays lead to, obviously one is income that will be converted into Bitcoin, and then if those two outperform Bitcoin, then I'll end up hitting a point where the number of Bitcoin hits what I originally started with, at which case I'll most likely convert back into Bitcoin. But if the equity is still performing and there's a long-term play I like there, then I'll keep it in my equity portfolio as I do with Coinbase shares and others as an additional diversification.
Yeah, this is interesting. Just I want to, for the thought experiment, and this is not an advice. So let's say we focus only on the liquid distribution and we take a full in kind. You get 50% of ETH and BTC. One strategy would be, as BTC does not yield and you don't want to take counterparty risk, you convert your 50% BTC in ETH, you self-stake or whatever with the service, stake your ETH, you compound it, and at which point will you buy back the BTC over time with the yield interest, the staking rewards? How do you see this strategy?
Yeah, so it depends on your risk profile. So if you want to take that as a lower risk profile, then just auto convert all your staked ETH into Bitcoin as it comes in. If you want to go for a higher risk profile and you're playing the ETH is higher risk, then I'll be compounding and I'll just reinvest all of my staked ETH. And then I'll have my Bitcoin target and I'll be tracking the price. And once it hits the price based upon how much litigation proceeds comes in, once it hits my original Bitcoin position, I'll make the decision there to convert it all back to Bitcoin because I've already got enough of the ETH exposure that I wanted. So that's how I'll be thinking about it. And obviously, I'm very active in following what's happening with Ethereum, what's happening with Bitcoin, what's happening in the industry. So I'll be on top of those trends and kind of sharing my commentary with people as things progress and my opinions on things as well.
Fair enough. Thank you very much. On to the next.
Thanks, Natty.
Thank you. Okay, next speaker is Danette.
Yes, hi. Hi, Simon. Thank you so much for what you do. If it weren't for you, I would not be able to stay up on all this. My question is about those of us who are in earn. Is it, first question, is it the same distribution, half and half? Well, first of all, do we get a distribution? Second of all, is it half and half BTC and ETH? And if you have less than 100K?
Okay. So yeah, the 100K the 100K thing is if you withdrew 100K 90 days prior to the platform filing bankruptcy, then it will affect your recovery and there's a bit of a legal battle to follow. If you didn't do that, then the 100K is completely irrelevant. And last time I saw the stats, I think preference is only about 2,300 people of the 650,000. Don't quote me on that, but that's last time I looked. So if you didn't withdraw, then this 100K number is meaningless. So then what do you get? Well, as an earn, it means that you were earning interest and you're going to receive a crypto distribution, which, based upon the prices on the 31st of May, they calculated to be about 36% of your dollar claim. Now, that's one heck of a mouthful, but the reality is you're not going to know how much Bitcoin and ETH you're going to get back until the whole process has run its numbers and run its calculations, which will be round about October. So you're going to know in October, and you're going to receive, about 50-50 Bitcoin and ETH back into, if you're from the US, a PayPal account. Then you're also going to receive, and you'll be entitled to receive, a bunch of shares. And those shares aim to be traded on the public market, and aim to, try and become more valuable over time by making the most of the assets that are going to take several years to mature. You'll be able to sell those shares if you're used to just selling in a normal way in your brokerage account. But those are the three different things you're going to receive. And there's one more part. Every time a committee successfully sues and makes a profit from pursuing about 200 different law cases that we've preserved and we get to benefit from, you'll receive some additional money, which will probably be sent in dollars to your PayPal account. And then that will just keep coming in, hopefully, over the next few years. But those are the different things you're going to receive.
Okay, great. The distribution of BTC and ETH relative to what we had, did you say we get 36% of the dollar amount?
Okay, so when I did the calculation, I think it's going to be about 25% in terms of Bitcoin back versus Bitcoin that I had. When you're messing around with dollar prices, in the plan, it's described as 36%. And that's not necessarily misleading. It's just what you have to do, because you can't really put a crypto debt in a bankruptcy, because then if the price of crypto goes up, you end up making the company bankrupt again, and return us back here. So it's a bit of a game. It's just the way it is. But think about receiving about 25% of what you had in crypto, and you may get a chunk more if the market works in your favor.
Yeah, well, mine was alts and they were worth more then, so maybe. But
Yeah.
Okay, great. Thank you so much, Simon and Azad.
Pleasure.
Thank you. Okay, next speaker, let's bring up Jeremy. Jeremy Trading. Okay, let's try Adrian.
Yep. Hello. Good afternoon. Can you hear me?
Adrian.
Hey. Okay. Thanks. First of all, Simon, it's a very good overview. I just have a couple of questions. So I'm from Canada. Do you know whether it's first question was, do you know it's gonna be via PayPal also, or not, or it's probably different third party to get the claim back? So that would be the first question. The second question is
I'll take that one, and then we'll
related.
do the second.
Yeah.
So international customers, they're likely to be able to just withdraw from the Celsius app the same way custody did, but they are looking for a distribution partner. The reason is because in the future, you will be paid additional funds from litigation. So if we get Majinski's wealth, that will come back to us, and you'll have an additional distribution. And after 90 days of coming out, Celsius is going to be closed. There will be no app anymore. And so they have to build these different partners, and we don't know who they are yet. But the UCC is taking a very cautious approach. The last thing they want is to end up in another company that has trouble in the future. And so they're going for very large players like PayPal on the US side. But the answer is we can't give you an exact answer, but what I will be doing is withdrawing my funds directly from the Celsius app if this is still an option. And because I'll be a larger claim, I can have a bit of an influence over whether that's Bitcoin or ETH.
Yeah.
And
Okay.
yeah. But you
But
will, yeah,
right.
you're either going to be distributing direct to your account from Celsius, or there's going to be another partner, which may be PayPal. I'm not sure if PayPal is probably regulated in Canada, so it sounds like a good bet that it might be.
Okay, sounds good. All right, thanks. So the next question would be, I think, similar to the previous questions about the 50-50. So, Bitcoin and ETH. So I have, I have about 70 to 30 ratio between the BET and ETH, and I only have two of them. But I think my understanding is it's gonna be converted into US dollar first, and then it's gonna be, based on whatever 36%, and then converted to US dollar at the what in October most probably, right? And then after that, then they will do a split. So it doesn't mean that just because I had 70% BTC, it will eventually be dragged down to 50-50 ratio. Is that correct?
Right. Okay. So yeah, it's not quite correct, but I'll try and help everyone understand it. So it was determined in court that only funds held in custody belong to creditors. Everything else belongs to Celsius. And so your coins were determined to not be your coins. So the only thing that's relevant about your coins now is that it calculates how much of the pot you're entitled to. And so what they're doing is they're saying, on the day that everyone went bankrupt, we're not converting anything to dollars, but what we are doing is we're saying, here's a fixed price. And on that day, Bitcoin was worth this, ETH was worth this, Cardano was worth this, Sol was worth this. Multiply that price by the amount that you had, and we're going to do that for every single creditor, and then that will make up what we call 100% of the pie. And so all that the price does is it says, what percentage of the pie are you entitled to? Then you've got to ask, what is the pie? Well, the pie is whatever Bitcoin is left, whatever Ethereum is left, and Nuco company equity. And so nothing's going to be converted to dollars. The funds are not yours. You just have a claim now. And then that claim is going to give you entitlement based upon that percentage of the amount of the pie. Does that make sense? Okay, I think we took him down. Hopefully that's clear.
Oh, sorry about that. Okay, let's try again with Jeremy Trading.
Hey guys, how's it going? So,
Hey, Jeremy.
I like your plan, and a lot of my assets were the same, just risk money. I had to get on this a little late, so if you've already went over this, I can listen to the recording. But with your plan, you're saying you're going to go for the orderly wind down, right? And
No.
then, okay,
there's no choice to go to an orderly wind down.
Okay.
Yeah.
Go ahead.
The plan is what you're voting on when you vote on the plan. We'll cover this more in video 3. Is you're voting on a plan where Fahrenheit are the sponsor, and if for any reason that can't be executed, then we're going to have further delays, and we're going to toggle into an orderly wind down process, which I believe will give you a higher crypto distribution but lower recovery overall. And we have no choice in that. But if you're a member of either the Earn Ad Hoc or the Loan Ad Hoc, then you will be involved in consulting on that decision to toggle before it actually becomes a decision. But it's actually Celsius in the plan that will determine whether Fahrenheit's plan is unworkable, and then they're going to cause the additional delay and go to an orderly wind down. So we don't get any say in that choice.
Okay, so you were talking about litigations that you were going to take on personally with your legal team. So,
all right, let me crack that one as well. Thank you.
Yeah.
It's good because so I'll cover more of this in video 3. But one of the options when you vote is to transfer all your litigation to a litigation administrator, and they're going to do it all for us. And then you just everyone pulls their claims together. They pursue the litigation. There's a board there that oversees it. and then every time they succeed, they'll just send you some money.
And that happens automatically.
Or automatically, if you, and under set circumstances, which I'll cover in video 3. So you got to vote the right way to be in that.
Okay. I think that answers all my questions then. Thank you.
Awesome. I'm so glad you asked these questions, because things I think something's clear in my head and it's just not coming out the right way. So these really help.
Okay, we've got quite a few requests come through. How much time you got, Si?
I wanted to end on the hour. Where are we? Okay, we'll do another 10 minutes.
All right, let's bring up Tony. Tony, you there?
Hello, can you hear me?
Hey, Tony.
Yeah, hi, how you doing? Hi, good evening, everyone. Well, evening in London, but wherever you are. Hello. I watched the video earlier, Simon. Very interesting. Thank you for that. It was good to see, this idea of having a kind of a more positive spin on things in terms of this kind of cleanup operation that you were describing, and how the company that will emerge from all this chaos that we've been put through over however many months now, would actually
over a year.
Yeah, exactly. It feels a lot longer. But from the perspective of the regulators and so on, it would kind of be quite a pristine project, so to speak. And I hadn't really thought about it in those terms, so it did give me a kind of a different perspective. So I thank you for that.
Pleasure.
I've got a couple of things. It seems that we're relatively clear on the issue of what the distribution will be regarding Bitcoin and ETH.
Mm-hmm.
But we don't seem to be very clear at this point in terms of the share allocation.
Mm-hmm.
I mean, obviously, the allocations will be different depending on, what your account had, whether it was, whatever it might have been, loans, earn, however. But maybe I've just not seen it, but there doesn't seem to be any kind of either a formula or anything to really tell us how many shares we're going to receive. What is the allocation? How many shares are they actually looking to distribute? Would it be in the millions? Would it be in the billions? I mean, doesn't seem to be anything, or maybe I've just missed it.
Okay, so let me try and help. So firstly, number of shares is pretty irrelevant. It's just valuation.
Right.
And so there's going to be a company that has $300 million of illiquid assets, which consists of investments in companies like Core Scientific, which is a really decent asset.
Yeah.
Rhodium, another mining company that's about to go public. Like a SAFT that gives us entitlement to some Matic coins in the future. And any good institutional loans. So, for example, we're owed about half a billion from, or 400 million from Equities First Holdings, but they stopped paying. Mm-hmm. And so bad loans will go to the litigation trust and good loans will go to Nuco. And so about 300 million of those types of assets, which will be managed by Fahrenheit or the manager, to allow us to, it comes into the equity value because we've got a company worth 300 million or more.
Mm-hmm.
And then you've got all the mining assets, which they're valuing at about 565 million. Mm-hmm. And then you've got 450 million of our Bitcoin and ETH that will go over there. So you end up with a company that has about $1.2 billion of assets.
Yeah.
And that brings us to about a 67% recovery, but with a bit of games and shenanigans around that whole dollar value and crypto going up and all those silly games that can happen just because of the nature of the process. So in a nutshell, there's about 60% there. And that additional 40% needs to be made up by creating a company. And then if you're thinking in Bitcoin, you're thinking about it, how it can outperform Bitcoin.
Yeah.
But yeah, in terms of the number of shares, what's going to happen from here is, firstly, the company needs to be approved by NASDAQ. That requires getting out of bankruptcy, filing certain forms, which the SEC signs off for, making sure it doesn't fall in with the Investment Advisors Act, getting a temporary approval from New York to distribute crypto. And then once you've got all these approvals, which will come out, the regulators get to say what their issues are during the confirmation statement, but most of them have just simply reserved their rights and come up with settlements and various other things. Then you end up with a company that a transfer agent will have to set the number of shares with Fahrenheit, with Celsius, and distribute that to your brokerage account.
Mm-hmm.
So everyone's going to need a brokerage account, and it will say you're entitled to this number of shares and that stuff. But in a nutshell, it's a $1.2 billion valued company. They said that it may be revalued just before the distribution. And everyone will be entitled to their pro rata share of that based upon the exact way it was calculated that you get your pro rata of crypto. We don't know how many shares there are. We don't know what the price per share is. More details to be figured out. And you can make sure I'll be updating everyone as those details get figured out. But the most important information is the valuation. And number of shares is kind of somewhat irrelevant.
Okay.
Hope that helps and doesn't confuse you further.
Okay, sorry, I just wanted to get one more person in, so I had to remove Tony for that. Sorry for that. So let's just get Mark D.
Hello, Simon. Thanks for everything.
No worries. Say, Mark.
Yes. Okay. I'm hearing both sides of this question, so maybe you can clear it up for me. Okay, if I had $100,000 claim, it seems logical to me that I would be rooting for the price of ETH and Bitcoin to go down. That way, my $100,000 claim can give me more ETH and Bitcoin. So that's what logic tells me. But I've heard the other side. I think, including yourself, who you've mentioned that we should, as creditors, be rooting for the price to kind of go up, but not beyond a certain point.
Okay, yeah, let me try and give the dynamic. So we are in Bitcoin and ETH now. We've got a bunch of shit coins to service the custody claims because they can only receive the same coin back that they had. But everything else is in Bitcoin and ETH. So we're not taking dollar price risk in that sense because our balance sheet is Bitcoin and ETH at the moment. But we do have some dollar obligations. And so originally, there was a moment when you want the price to go down because it had crypto obligations. And so it reduces the amount of obligations that you have. And but let's just not focus on the past. Let's focus on where we are right now. Where we are right now is we have a bunch of Bitcoin and ETH, and we have to pay like 100 million in administrative costs, 450 million over to Fahrenheit, about 300 million over to a convenience class, and they're fixed dollar costs. They're going to receive money in Bitcoin and ETH. We have Bitcoin and ETH. And so if you think about it, if the price of Bitcoin goes down and ETH goes down, then when it comes time to give Fahrenheit 450 million, and it's not giving them, sorry, I got to get the language right. We're not giving anything to Fahrenheit. We're giving funds to Nuco, and we'll receive shares in it. So we'll just have a proxy for that amount. It just means that we get less crypto and Nuco gets more crypto. So it's just a redistribution. Then imagine we've got to pay 70% of the dollar value to the convenience class. If the price goes down, the convenience class are going to get more crypto. And if the price goes up, Earn are going to get more crypto. So it's just a little bit of inter-group tension. And it's a gamble. There's nothing we can do about it. So it just doesn't really matter what we root for, because the price is going to be determined at a fixed price prior to all of the different processes that are going to happen in the confirmation hearing. They'll do a confirmation order. The judge will say, we're done. And the price is going to be this. And it's a gamble. So there's nothing we can really do. But yeah, right from this moment, if the price goes up and if it goes really high, and the plan is not confirmed, then there's a possibility that they could pivot and give all our assets away and just pay us off and make us 100% whole. But the further into the process we get, the less likely that is to happen. So we don't want Bitcoin to go above 55K before a confirmation, if you want a rule of thumb. If you want it to stay below 55K, but the higher it gets to 55K during confirmation, the more earn are going to get, and the less crypto will go into Fahrenheit, the less crypto we'll have to sell in order to fund the litigation trust. And if you're in the convenience class, then you're going to get less crypto than if the price crashes. So it depends which camp you sit in, and you said you had over 100K. So you're in the earn camp, I think.
Thank you so much, Simon. You cleared it all up for me, and we all owe you a whole lot of gratitude. Thank you so much.
Awesome. Thank you.
And that's a wrap.
Okay, awesome. Thanks a lot, everybody. I hope you got you got stuff out of the video. Stop building up your questions. So as a quick recap, if you didn't watch the YouTube, watch it. Develop your own plan. Develop your own strategy. I'll tell you exactly what I'm doing, and if you're not in my situation, I gave some kind of ideas around what I would do if I was in a different situation. You got to decide what's right for you. We've still got lots of time. The 22nd is the end date, the end deadline for the voting. You don't need to rush into anything. And my understanding, don't correct me, don't hold me to this, but I've seen people that have voted and then they can just go in and re-vote if they want to change their mind. So my understanding is if you do a new vote, it will just supersede the old vote. So if you've already voted and you want to change your strategy and your approach, my understanding is it may not be too late. But I've not voted yet, and I'm not going to vote until we get closer to the deadline. And I'm planning 3 more videos. If anyone, the next videos, they're going to be done through the membership portal that our team is creating at simondixon.com/recovery. So enter your details in there, and next week, hopefully, we'll be sending you a login, and we'll be covering everything live as it happens. I'll be voting with you live. You'll know how I'll vote. You'll know what I'm doing. You'll know whether I'm toggling. You'll know what the important information I think is from the supplement documents. We'll be sharing this process together, and that's a completely free site. And so feel free, please go over there, enjoy it. And under each video, you can also ask additional questions if you have them. We'll put the slides up there, and we'll be doing another space just like this next week after the presentation. All right, okay. So thanks everybody, and I hope that the new kind of thinking, I think we've done to death all the doom and gloom. And maybe you're still in a doom and gloom place, so I don't want to control how you feel. You've got to go through your natural process. But from here on in, I think we know everything that's likely to happen. There's a few things that we can influence and change, but if we can't influence it, the only thing you can do is develop your plan of what you're gonna do. And at the end of the day, that's the only thing you control right now. If you don't have influence in other parts of the process, you may want to be involved in one of those ad hocs or one of those litigations. That might be the exact right thing that you need to do. But take action, decide what you want to do, where you want to be, and the only thing you can control from here is the meaning that you give to things, what you do. And I hope that over the next 4 weeks, this gives you a framework so that we can move forward, onwards and upwards. Peace, love, and unity. And I'll see you this time next week. Bye-bye.